welcome on board Sandip Sabharwal as well and figure out what he's making of the market right now. Sandeep, hi, good morning. Good to have you on the show. We were just chatting yesterday about Asian Paints and how you think actually, maybe it could bottom out in the year ahead. But, that's not the case, Sandeep. I can even see names like IndusInd Bank, Nestle, Tata Consumer. We know your thoughts on FMCG, but what about banks, Sandeep? Do you think that the underperformers, like a case in point being IndusInd Bank, Bandhan, etc., even IDFC, and it's a long list, AU Small Finance Bank as well added in there, could they actually play catch up?
Asha, if we look at the internals of the banking stocks, especially the smaller ones, then what we need to see is that how the asset quality buildup is there, what have been the growth drivers in the past, how margins will get impacted for them, etc., and what the managements have historically said and what they have been able to deliver. So many of the smaller banks, that's why I do not invest too much into banks outside the top ones because in the banking and financial sector, it's NPAs which determines how well you do or the asset quality. Reported profits can be absolutely anything because profits can be boosted up if you do less write-offs. Profits can be less on a reported basis if you do more write-offs, etc. So asset quality remains the most important one. So among the banks you named, IDFC First Bank is a bank which we have actually been accumulating over the last few weeks for the first time after the stocks corrected over 35% from the top. Because as per whatever I saw, the last quarter results, although there was reported profits and some asset quality stress was there, but the management was very proactive in writing off and maintain their net NPAs. And after this fall, I think it's reasonably well placed. And as next year, we'll see some monetary easing, we'll see some liquidity improving, etc. And many of the smaller NBFCs will also, like many of the NBFCs will also benefit because of that trend. So among the banks you named, IDFC is the one where I'll be positively inclined.
And Sandeep, I think, that was the big standout performer this entire year, right? The kind of distinct moves that you had within the auto pack, the underperformance in the first half from the two-wheelers, then the re-emergence. I mean, who would have thought Bajaj Auto would be one of the standout performers within two-wheelers? And the kind of pecking order shift that we've seen in the passenger vehicles, wherein Tata Motors ebbed off recently and it's M&M which has emerged the winner. How do you think 2025 will play out, though?
2025, the key is that what sort of revival we see in the auto sector. This year has been very turbulent. Like initially, there were good demand trends, then inventory got built up. Festival season was fine, but post-festival season again, growth concerns are there. And I think the inflationary concerns in the minds of investors, like the consumers, has held back consumption across various sectors. And on top of that, liquidity and interest rates have been higher. The good thing for them has been obviously that raw material input prices have been moderate, and that's helped them maintain profitability. Going forward, next year could potentially be better. How much better we need to see, but I think all trends related to rural income, post monsoon pickup, and the overall trends of the economy after this phase of high inflation impacting the consumers would be better. Now, among the auto companies, the leader, like you said, has been M&M, and that's been our top holding. Tata Motors obviously exited some months back at around 1100 levels. So that stock on pure valuation basis has again started looking attractive. So we need to evaluate that. But as core holding, we continue to hold M&M. Maruti is something I like, but the stock's not actually performed. Like it had a run up, then it gave up most of the gains. Because strategically, they have also realized that they need to embrace EVs, get into segments which will grow in the future. And in two-wheelers, after the initial run-up, there's been a substantial correction. So if one has to pick something from the two-wheeler pack, I would think that Bajaj Auto after nearly 30 odd percent correction from the top could could be interesting.
Well, taking the auto discussion forward, I would like to quickly take your point and your viewpoint on the battery companies as well, because both these companies and the leaders there, Mara Raja and Excite, are going to be in focus today after Motors India have gone ahead and announced that for their ICE and CNG offering, they're going to be collaborating with Amara Raja for the AGM batteries, which are like 150% more in terms of the outperformance with respect to the conventional batteries. And with Excite, the earlier MOU that has been signed, now it converts into a binding term agreement. This indeed gives confidence on both of these companies. But specifically, Sandeep, any of the stock that you like at this point in time, and especially what's your take on Excite that this EV battery is through? Can we expect more such announcements in the times ahead?
See, battery companies, one thing is probably going to happen that the battery composition per vehicle is going to go up. Like in the ICE vehicle, it will be one battery. As we move to EVs, the number of amount of batteries and the value of batteries required moves up substantially. So on the back of those investments and announcements, these stocks have got re-rated also over the last 2 years. But the earning delivery is yet to come. Now, the other factor which also will be there will be how the overall auto industry grows. Because if the auto industry growth is muted, then many of these investments will take time for them to actually start yielding results. So I think that's the concern somewhat for battery companies. The other thing is also that battery technology is also evolving. So when these companies are investing huge amounts into a particular battery technology and there are some improvements out there, so then how do they adapt to that? So I think the opportunity is there. How well it will be captured is something we need to see. And the initial run up because of this transition to EVs has already happened. Now I think we'll need to watch out for the performance.
Sandeep, I wanted to understand about the infrastructure space. Given the fact that this year being an election year, you did see a slowdown as well when you talk about the way how the spends have been on the contracts versus last year. But what does it mean for the infra space going ahead? Should one actually build hopes that things will only rebound going ahead, the contracts will only start flowing in and therefore start taking bets in these sector counters now if they haven't already?
Yes, I think the space should do well because of the fact that the just look at the focus of the central government. It's always been on driving the economy via investments rather than trying to revive consumer sentiments because consumer demand has been subdued. But on the industrial manufacturing side, the emphasis is there, and most of these companies have been doing well. So I would think that, like you rightly said, order flows were muted because of election, execution got impacted, and that will not be there next year. And this year, we also saw execution impacted for many of these companies because of severe heat wave and then prolonged monsoons. So that's tough to predict how that will go next year, but this year was extraordinary in that sense. The overall outlook, I would say that for this space is encouraging.
Sandeep, we were chatting about this just last afternoon as well as to how you're pegging on FMCG actually make a comeback. I was just looking at the list. I mean, names like a Tata Consumer, for instance, have fallen 15% year to date, a 19% loss coming in on a Nestle. Asian Paints, of course, is a different story altogether. I'll come to that. But firstly, just on FMCG, because you do track the space closely, do you think 2025 will mark these stocks bottoming out?
Yeah, ideally, initially we were expecting that they could bottom out this year itself, and with the festival season, we could see the demand revival. But that didn't take place. So the stocks ran up in anticipation of revival, and then they corrected subsequently. So YTD returns would still be low negatives. But if you look at the fall from the top for many of these companies, most of them have fallen between 25 to 35% from the top. So typically in large FMCG companies, historically, I've seen that 30, 35% from the falls from the top typically is a level where one could invest. And most of the stocks never tend to fall much more from those levels. So I would be positively inclined on a vast majority of these large consumer companies, which would include all the names which you took.
All right, Sandeep, if you can help us with your take on the IT space and how do you read the Accenture earnings? The company did raise its guidance, but what these brokerages are concerned of is that they are highlighting that the demand environment, more or the same, remains intact, as well as the deals that Accenture does not currently see an improvement in the overall spending by the clients. So how do you read through this and what are the cues that you are taking for the Indian IT companies?
So the numbers and the guidance increase was taken positively, but like you rightly said, that order booking was flat on year, more or less. And to that extent, the demand uptick might not happen to the extent which many of the analysts are predicting. On top of that, we have the Fed also easing off on interest rate cuts, and there's a new government taking over with their uh, stated policies of cutting down on a lot of expenditure to repair the US government's balance sheet. So I think there'll still be uncertainties around, and most of the IT stocks have had a very strong rally. Like if you look at the larger ones, they have had a decent rally, but many of the mid-cap ones, they have virtually moved up in a straight line and today trade at valuations which are 2-3 times historical earnings for some of the mid-tier companies, which would be unsustainable in my view. So I would take a cautious stance at this stage and look to the results next month to take a more considered view whether there's a case to be more optimistic.
Just stands for now.
Sandeep, I want to come to you to have your take and to know your favorites within the pharma space, because seems like in the market volatility, it's somewhat the IT and the pharma that is getting more of an investor confidence at this point in time. So how do you see the whole space panning out, as well as what are your top bets here?
If pharma had a strong run, then it's gone through a phase of consolidation. Some stocks have corrected, but many of them have not. So I think it's a sector where valuations, I would think, are still reasonable. So uh, I normally stick to large cap names in pharma. So we have a holding in Sun Pharma. We used to have Lupin, but we have sold off. But the company continues to do well. Dr. Reddy's could be coming into interesting price levels. So I think overall the sector should do decent. Many of the companies have growth drivers related to uh, improving profit margins as well as improved growth prospects. Uh, Again, for many of these companies, the US is the largest market. So if there are some policy changes out there which impact their growth, that's something we need to see next year. But except that, the sector seems well placed. Among the small and mid caps, there are many companies where analysts are positive because of the CDMO opportunities. I don't track them, but then there could be opportunities there also.
Right. Sandeep, I wanted to understand about these emerging themes. Like CDMO is one of the themes that has actually started to see a lot of pickup over the last few months. Apart from that, there is another theme that has been making waves of late. That's the renewable energy space, the solar, the ones that are related to solar as well. What's your take on that space? And do you think that favor that is found in the markets will actually continue come next year as well?
It's tough to predict, but I think solar is in a big bubble. Each and every company, if you see, wants to set up solar panel plants or cell infrastructure, etc. In my view, in 2 years, there's going to be so much oversupply in India that it's tough. It will be tough for that to get absorbed. So if someone wants to play the renewable energy theme, I think it's better to play it either via the power companies who are able to sign PPAs where also there are significant delays, or by companies in transformers, transmission, and other ancillary equipment segments where a lot of investments will be required, because solar as a theme, like if you look at the competitive advantage also, the Indian companies hardly have any competitive advantage vis the international competition. They are just surviving because of the import duty protection.
Interesting. Sandeep, the other thing I wanted to talk about is the entire capital market theme, right? We've seen that also play out very well this year. I mean, be it the returns on an Angel One, CDSL, BSC, and now you've got the DAM Capital IPO, which is currently on. Do you think this will also remain a good long-term bet? And can one continue to deploy more or even add fresh names, such as the IPO, which is currently on, at any given level?
So historically, we've seen that even in the global markets, as the capital markets have evolved, many of the companies which focus on capital markets have done well. Now there could be various competitive advantage dynamics, like for pure broking companies, you could see margin squeeze, new players come in as entry barriers tend to be low. But on themes like you said, like CDSL, BSC, or themes related to wealth management, etc. I think there or even asset management companies, there we could see more secular growth. Now it's a question of valuations, because the valuations become excessive at some points of time, and then there could be corrective moves because of some negatives, etc. Like we saw BSC sell off significantly a few months back. So I think you have to use those opportunities to buy rather than buy at very high valuations.
All right, so that's the take coming in on the entire sector segment that is linked to the capital markets. And right now, as you can see it on your screen, you will also have the pre-open trade actually hit, given the fact that we've seen a mild close or flat close coming in for the US markets. Will be pertinent to see how the Indian markets react to that, because the GIFT Nifty has indicated that we are in for a negative start. Let the rate settle and we'll talk then about the pre-open trade. But Kunal,